Good morning, everyone, and welcome to the next instalment of the IR35 Navigator Think Tank series. Today, we're going to be talking about supply chain transparency and the importance of it historically, but even more importance of it moving forward now that the IR35 reforms have taken effect. So to kind of caveat the discussion, obviously, this is focused around the reasonable care requirement. The HMRC internal manual ESM 10014, for those who want to check it out, state that the client must take reasonable care when determining whether the worker would have been an employee if they were engaged directly. If the client fails to take reasonable care, the responsibility for the deduction of tax and national insurance contributions and the payment of the apprenticeship levy and paying these to HMRC will rest with that end client. So that's an important first point, and it should be something that everyone is now cognizant of and is aware of, given the reforms have taken effect. But looking at the reasonable care requirement a little bit more says that reasonable care means clients should act in a way that would be expected of a prudent and reasonable person, in the client's position. Now, that's quite a vague consideration. HMRC give a few more details around it. But today we'll be looking at the varying sizes of companies, I guess, what transparency means, what reasonable care means in that remit. But there are examples on HMRC's website of reasonable care, and those focus on determining that every worker who provides their services through an intermediary is caught by the off-payroll working rules without giving any consideration to the specific facts of individual cases, what we now know as blanket determinations, perhaps. It gives a whole range of other topics, but most importantly to our discussion today is that a company is deemed to have not acted with reasonable care if it fails to reconsider determinations where there's been a material change in circumstances. So we need to look today at the ongoing nature of the changing circumstances that happen in contracts over time. It's now not enough to just assess a contract at the outset and leave it as that. There needs to be some ongoing care and due diligence paid to the supply chain. And in order to meet that requirement, it's going to be essential that those acting within the contingent supply chain know their role, but also the function that everyone else in the chain is performing in significantly more detail. And whilst the requirement in the past, while it has been a requirement in the past, it's perhaps now been even more forced into the spotlight given the increased risk associated with not knowing what every party in the supply chain is doing. So with that in mind, as I say, today we're going to be looking at supply chain transparency and how you can start to encourage that in your supply chain. As always, I'm joined by our expert of panel who are going to talk around this in much more detail, focusing on different areas of the equation: tax, legal, management. And we'll go into more detail on supply chain transparency. So first of all, let's kick off supply chain transparency. Bernie, what do you think supply chain transparency means?
Well, I think in its broadest possible sense, over and above off payroll, it's all about understanding exactly how contractors are engaged, and that is in terms of their payroll mechanism, but their status, both in terms of their tax status and their status for rights as well. It's wider than just tax penalties potentially. It's all about how are those individuals engaged. And I think particularly end clients have been not guilty maybe, but in the past they haven't taken much notice of how individual contractors are engaged. And we certainly saw that in the run up to the off payroll rules, when clients didn't know how many PSC contractors they were utilising. They may have known their total numbers, but they didn't know how many were sort of bog standard agency PAYE, how many might have been through an umbrella, and how many were PSCs. And we saw that time and time and time again. And I think the thing is that clients now really have no choice but to have a really good understanding of the payroll models of all of the contractors that they engage. One, so that they can comply with these new obligations under the off-payroll rules. Obviously, initially that should be done already, but on an ongoing basis. But it's not just about PSCs, of course. You know, there's transparency needed for all types of payroll mechanisms, and particularly where there is a payroll intermediary such as an umbrella, because clients think they're protected from any liabilities if they use an agency, for example, but that actually isn't the case under the offshore aspect of the onshore offshore intermediaries legislation of 2014. So clients have to have a really good understanding of their agencies and of their contractors. There's just no getting away from it.
Absolutely, from a number of different perspectives. Yeah, completely. So let's pass the same question to each of our panel today, just so we get a different perspective on that. Tom, let me come to you. What do you think supply chain transparency means?
Clearly, I come at it from a perhaps more narrower view than Bernie does, because I clearly focus on the tax issues that arise in the chain. And I think historically, the chain has been quite opaque. Perhaps you'd know who's above you and below you in the chain, but other than that, you wouldn't have much oversight on the rest of the players in the arrangement. And that's led to all sorts of issues historically in terms of non-compliant umbrellas, which are, I call them umbrellas, but that's been very, 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 very unkind to umbrellas. They are tax avoidance schemes that hold themselves out as umbrellas and pay contractors in loans, which are non-compliant. We've seen that. We've seen MSCs, managed service company providers, being inserted into the chain, which has caused compliance issues. And in general, it's not really been too much of a concern for the people in the chain, because by and large, they've not been responsible for the tax liability. It's not really been flowed up or down where there's been failures in tax in that chain. But clearly, there's been a number of changes over recent years. I think the biggest change is the Criminal Finance Act 2017. I mean, that introduced a corporate offence for failing to prevent tax evasion, and that was a very, very wide definition in there of what that covers. Essentially, it needs three things to be there. There needs to be a tax evasion offence committed by a taxpayer. The commissioning of that offence is criminally facilitated by a third party, and that facilitator is associated with the corporate. Now, associated is a key word there, because that's quite a broad definition. That's not just employees of the corporate, that's anyone who is acting as an agent or a contractor or supply services for or to that corporate. And that is a strict liability offence. That means that you are guilty unless you can show that you have put reasonable procedures in place to prevent the facilitation of that tax evasion. And that's an unlimited fine. And let's be blunt, that is going to kill your business. So there's very, very, very good reasons why you should have complete oversight of what is going on in your chain, not least for showing under that offence that you've taken reasonable procedures to prevent any evasion, but also to ensure that no liabilities roll back or forward to you in the chain. And people are not getting their heads around this, that people are still seeing themselves in a very, very isolated bubble. And you're not. You're part of a chain of suppliers, and you are as responsible for your part of the chain as you are responsible for other parts of the chain. And I think for me, the time has come that we need the tools, and there are the tools out there to have complete oversight for the chain, and understand what each party in that chain does, why they do it, how they do it, and bottom line, protect yourself.
Yeah, absolutely agree with that. And we'll come on to what that actually means in practicality shortly, but they have an explanation of what transparency means from a tax investigations and tax advisor perspective. Got it from a business compliance perspective. move on to Carla from a legal perspective, and certainly from your experience as general counsel for a number of big recruitment agencies in the past. What do you see supply chain transparency as meaning?
Well, I think practically speaking, it's impossible as the end client to know exactly what's going on all the way down the chain. However, what you can do, in addition to having a supplier code of conduct, which is just a document, and you shouldn't just take comfort that you've ensured that your supplier has signed that. You need to have contractual indemnities, contractual requirements that your agencies or your suppliers will do due diligence on whoever they engage. And that usually means that agencies will need to have a PSL of accredited umbrella companies who are either a member of a professional recognized trade body, that they aren't an offshore umbrella company, that they've been audited. And that means not only relying on the audit conducted by the professional body, but you should be conducting your own audits on a regular basis. So it's a combination of contractual indemnities and practical measures that agencies and clients need to take in terms of conducting due diligence on a regular basis, not just engaging with a party and relying on them to do the due diligence. It's a matter of regular compliance and spot.
Regular updating as well, I guess, in terms of updating those policies, checking things through, making sure they're relevant all the time, because it's going to be an ever evolving space of law, isn't it?
Absolutely.
Well, okay,
Reece,
great.
can I just add something there? I think Carla said something really important, and that was not relying on others to do the auditing and the due diligence for you. To be frank, relying on someone else giving some sort of kite mark to an entity is not reasonable care. I mean, that's a bit like taking your car in for an MOT, driving it for 6 months, knowing that the wheels are falling off. And then when you stopped pointing to the MOT certificate and saying, well, this guy told me 6 months ago that everything was hunky-dory with it, you are responsible, just as you're responsible for the roadworthiness of the car there. You're responsible for want of a better phrase, the roadworthiness of any of those companies that you're involved with. So you need to do your own due diligence, and you need to do your own, I wouldn't go as far as necessarily saying your own auditing, but you need to show that you've taken steps, that you've not just taken it as a de facto compliance because they hold certain memberships, and many of these are memberships. They're not government approved, audited, or government approved standards. They are standards that have been put together as a professional body, and those standards are well intentioned. But what's the sanctions for not adhering to those standards? Well, you can no longer be a part of that professional body. Well, I'm afraid for a lot of agencies or a lot of umbrellas who know they're being uncompliant, that's just the cost of playing the game. They're willing to take that risk. So we need to be very careful relying on others.
Can I just add here, Reece, that Tom spoke about MSC legislation and transfer of debt. It's one thing flowing down your obligations or obligations and requirements to the next party in the chain, but if that particular supplier disappears or they become insolvent, then you're certainly at risk for transfer of debt as well.
Yeah, that's a really important point, and I think you can relay a lot of what you've both said there back again to the HMRC manual, which is obviously in relation to Chapter 10, but they've made some good points as to the kind of examples of behaviours which don't constitute reasonable care, which is the requirement, and those include failing to ensure that the person tasked with completing the status determination statement possesses the knowledge required to complete it and is provided with the required level of support to do so. We've seen examples where people who are drafting the SDS and people who are tasked with the IR35 reform simply do not have anywhere near the level of understanding required to complete those, and that would be a question of reasonable care being taken. And we've helped and we've spoken with a lot of HR departments who have had this thrust upon them, and some of them have got to grips with it very, very comfortably and have done a very comprehensive job of it. Others who just, this is simply not within their understanding and remit. So helping them and creating a compliance framework for them has been essential. The other side of that is another reasonable care requirement, or an indication of not meeting reasonable care on HMRC, is that the client subcontracts the SDS process to another party and doesn't confirm the accuracy of the conclusion and the reasons for it. As Tom says, HMRC have made that clear. If you just take an SDS from someone and just pass it down the chain, just box ticking, it doesn't meet the reasonable care requirements. And we'll come on to it later as to how HMRC are really going to start to investigate that, and how you can prove that you've met the reasonable care requirements. How do you do that? How do you show that you've taken that on board, assessed it? HMRC are very clear on their website that they'll expect much more records, much more detailed decision-making process documents for the larger multinationals than they will for the smaller companies. But everyone has to be responsible for doing and carrying out reasonable care due diligence throughout the chain here. So yeah, absolutely key points.
And can I just add there, Reece, that we were talking here in the context of an end client who clearly is affected by the new off-rate payroll rules. So they are a medium or large company. So you have to take reasonable care in that context. You know, you have a turnover of £10 million plus, you have 50 employees, you have a balance sheet of 5 million plus, or I can't remember the exact figure it is. So reasonable care is going to have a higher expectation than if you're talking about, you know, a 2 or 3 man band who doesn't have the resources. Clearly, they will expect you to put in the commensurate resource compared to the size of your business. So it's no good saying we don't have the expertise, because you have the ability to bring in the expertise or bring in that knowledge from someone who is an expert in the field. So, you know, we need to have this in context of who's affected by this legislation.
Yeah, I completely agree. I think it's so much more detailed than we perhaps people are taking on board. 10.2 million pound turnover and 5.1 million pounds of assets, by the way, in terms of in your point before. Chris, okay, let's come on to you. From your perspective as chief exec of a IR35 advisory service, and from your background in the umbrella market, where do you come at this from?
Transparency is probably the key part of this statement. It's really the ability to look through the supply chain and really understand who's involved, and then to be, you know, conducting due diligence checks on each member in that chain. So it's, who are they? Are they registered at Companies House? Do they have a legitimate VAT number, and so forth? So it's going through a series of checks. Well, I guess no difference to the MOT that Tom was mentioning there, in that you've got a checklist to go through, and it's just really looking at each party in the supply chain. How do they measure up on that checklist? And also recognizing that it's not just a one-off situation. It's the ability to be able to do this at any point in time, to make sure that you know who you're dealing with. It just makes, outside of what we're talking about here in terms of contracting, it just makes good business sense to know who you're dealing with. So in contracting terms, generally there's a chain of individuals, and it's about looking at the money flow. How is it working its way through the chain? So if you do have, for instance, a situation where you've got an engagement that is considered inside and it's going through an umbrella, then it's the ability to be able to be satisfied that the money that's gone into the top of the funnel, as it's passed through the supply chain, allowing for margin deductions and so forth, that what is actually being received by the worker has been correctly treated for tax purposes. making sure that there's no sort of leaking holes in that sieve where potentially money is being diverted essentially into a tax avoidance scheme. So that for me is what it's really all about.
Yeah, I think that's so important. I might lean on Tom a little bit more to look at how that works. Obviously, from Tom, from your background in tax investigations, you've seen arrangements that have obscured the supply chain deliberately to hide tax avoidance measures on the back end. How can an end client, how can a agency get to the bottom of that? How can they see those points when they're deliberately being hidden from view?
You're right. It's deliberately opaque. I mean, that's the very nature of the arrangement. But it is that due diligence. You know, as an agency, why don't you have the right to just ask to see a payslip every so often from the umbrella? Nothing wrong with that. I mean, that's part of due diligence. Let's do a check here. Is you know the invoices that have been paid through. You know what should be on that payslip, and if there's something that's not showing there, or something that is out of the norm, then clearly you either take a view yourself, or you bring in an expert to take a view and tell you whether that is compliant or non-compliant. There's no magic to this. It's about ensuring that your business contacts and your business arrangements, as Chris has already said, you've done the due diligence on them. Where are they based? You know, offshore, red flag. Marketing material, have a look at it. Are they advertising a ridiculously high take-home rate that clearly couldn't possibly mean that everything's taxed under pay-as-you-earn? Do they have other red flags like QC opinion? That's HMRC approved. I mean, HMRC have never approved any umbrella in their life, and they're not going to start now. They're very clear that they don't want that to be their remit. So there's lots of red flags when it comes to the umbrella. Company's house, like Chris said. I mean, have you got directors that are offshore, or are perhaps directors of a number of umbrellas that are now struck off at Company's house? Have they got a track history of moving from, umbrella to umbrella every 12, 18 months? And if you can't do that due diligence, then, you have a responsibility as a business to do that. So you either learn to how to approach that, or you bring in some expertise to do that for you. And I'm not saying that you have to do mountains and mountains and spend days and every hour of every day making sure everything's compliant, but you have to do enough to show we're back to that reasonable care. If you can show reasonable care, then you have obviously protected you and you've protected your business. If you can't show that reasonable care, then you are potentially got a liability, maybe even criminally.
You've been doing some work with Orca Pay Group. Do you want to kind of talk around what that looks like? Because that strikes me as a good way of a company assessing the transparency points.
I mean, what the very nature of that is that Orca are very clear that they want the contractor to have total transparency. So they essentially show every deduction, every national insurance, apprenticeship levy, how that's been calculated, holiday pay, that's how that's been accrued and dealt with, and more importantly, how it's been paid over the year to the contractor, and putting that on a platform that's accessible by the contractor to see all of that, so that they have total comfort in everything that's deducted. Of course, they brought in WTT Consulting to audit those pay slips and audit those deductions and ensure that they are compliant with the appropriate legislation, both tax and with such things as holiday pay and that sort of stuff. So it's very much about A, transparency, and B, an external independent audit to confirm that everything that they are showing is correct. And personally, I think that's the way to go. I mean, this shouldn't be a race to the bottom. Companies shouldn't be trying to do things on the thinnest of margins and therefore attracting people because the fee that they're charging is the bare minimum they can charge, because that probably means that corners being cut somewhere. Actually, what people want is a good service. What people want is people don't mind paying for something if it gives them something in return. And if the fee that they're being charged is reflected in the fact that external auditors are being involved, that there's a technology platform there that shows transparency, that they can have comfort that they're not going to get a letter from HMRC in 12 months' time saying, you know, you've got an underpayment of tax or you've been involved in a tax avoidance scheme. That's what contractors who are moving to umbrellas are looking for. So this should be actually a race to raise standards. Who can put the best standards in place? Who can put the most attractive umbrella in front of the contractor? Because it gives the best service, it gives the most transparency, it gives the most assurance. Not that, you know, you can take home an extra £5.50 a week, because we don't do any of that stuff.
Absolutely, and I think there's going to be much more focus on those kind of transparent measures, because clearly, if you've got all of your payments up on a platform, you've got every payment being shown out to HMRC, is showing every penny being taxed in the right way, and it's all being audited by an external regulated entity every month, then in my view, that's certainly meeting the reasonable care requirement.
And that's the key there, that the audit is every month on every payment. It's not a once a year audit. It's not a check of, you know, 1 in 50. Every payment is audited, and that's the key to confidence.
I know. Oh, sorry. Yeah.
Sorry, Reece, can I just add here that compliance has traditionally always been seen as a kind of nasty overhead. But quite frankly, it's all about protecting your business, because at the end of the day, particularly if you're an agency, you are subcontracting your obligations to a third party, and you are ultimately liable for the actions of that party. So if that umbrella company is not compliant with the requirements that you have in your contract with the client, then you're responsible for that. So it's not only just good practice from a compliance perspective, but it's good practice with respect to protecting your business assets.
Absolutely. And we say this every week, don't we? And it's a difficult one, because it's very easy for us who know the legislation, know everything, to say, but it should be business as usual. You should understand it. You should have got to grips with it. And it's very easy to sit from a position of knowledge when there's a massive mountain of legislation and arguably scaremongering out there talking it through. But it has to be a step you take. It should have been a step you take ever since day one of your business, to protect your business from external threats. And this is just another external threat to get your head around. So I completely agree with you there, Carl. I think this has to be observed as business as usual, and the quicker we can all get to grips with it, the better. There are going to be people who have got to grips with it previously, who are going to take a step forward and an advantage on those companies that haven't yet got to grips with it. But that doesn't mean that we can't get to a compliance framework quickly and get back into the competition very, very quickly. Chris, I know you've been pushing for more transparency in the pay slips for a while, and I see there's offpayroll.org are doing some work on some payslip auditing to see some transparency and see if they can marry up the payments and things. I mean, what to you looks like a transparent payslip that an end client or an agency could grab hold of and say, yeah, that meets the reasonable care requirement. I'm comfortable that everything's being taxed properly.
Yes, now sometimes it comes in the form of just one sort of consolidated pay statement. In some cases, it could be 2 documents, that one containing the sort of official pay slip, which just shows the worker their sort of gross to net calculations, and then a separate document that essentially shows the workings of how the transaction has been fully conducted, in the sense that you've got the contract income that has been received at the top by the umbrella. Then you would expect to see the operating margin deductions, and from there on in the additional employer related costs that have been incurred, such as employers' national insurance and apprenticeship levy. So all this should distill down into what is essentially a gross payment to the worker, and then from there they should then be able to clearly see their own deductions that have been suffered in terms of tax and national insurance. So really, if you're just looking at it as if you're looking at a pie that's being carved up, to be able to understand, okay, this is the entire sum of income that's been received. This slice is being retained by the umbrella to cover their operating margin. These amounts have been paid to HMRC to cover all the necessary taxes and national insurance. This amount has been paid over to the workplace pension scheme, if indeed they are opted into the workplace pension scheme, and then this amount is what is left over that is being paid to the worker. So it should be very clear to be able to look at that and understand how all of the transaction is being conducted.
So, oh, sorry, yeah, please, Bernie.
So just to add to that, I mean, obviously, you know, if a contractor is engaged via an umbrella, you know, a genuine PAYE umbrella, then they are a worker for the purposes of employment rights purposes, and therefore they have the right to an itemised payslip under the Employment Rights Act. And a lot of umbrellas don't comply with that very well. Some do, but some don't. And as you said, Chris, it should be itemised down to the point that the contractor can see, you know, everything that has been deducted from them, and there should be total transparency. And that right to an itemised payslip is part of the government's push to more transparency. But furthermore, you know, agencies, if there is an agency in the chain, they are now required by law to produce a key information document and give that to all of their workers as well, regardless of how they're being supplied. So every single type of temporary worker must be issued with a key information document that is also designed to increase transparency and has to give pay breakdowns as to things like what the umbrella company's margin is, or, you know, if they are a PSC, what they will be paid if they're outside versus what they would be paid inside. So it isn't just about, you know, commentators within the market talking about the need for transparency. You know, the government is actively legislating on both sides of the equation, the right side and the tax side. So this isn't just us saying it's important. That, you know, there are really serious implications in all aspects if you're not being as transparent as you could be or should be.
We may be wandering down a slight tangent here, but I think it's an interesting topic as to why then do we think that there are differences? If it's as straightforward as that, and as the government is legislating, and the government, why has the government been, I guess, reticent to detail a framework for how the payslip should look? Why are there differences between umbrellas in terms of how the payslip looks? Everyone's being paid the same way. Every umbrella is working in the same way. Yes, there might be differences in margins, but ultimately everyone's being taxed in the same way. So where are the differences?
Well, I think the thing is that, you know, the rise of umbrella companies in the last 10 years has been unprecedented and unexpected. So I think the thing is that, you know, when an individual is engaged, for example, by an agency on a standard PAYE contract, well, then, you know, there's no money going anywhere except from the agency, tax and NICs, and, you know, and then to the worker, right? So there was already an expected amount of transparency, but because of the rise of the umbrella industry as a whole, both the good and compliant ones and the bad and non-compliant ones, you know, they're just not under the same obligations by and large as agencies, because they are not exposed to what we call the conduct regulations, which is a minimum set of standards that all agencies have been, you know, have to comply with, you know, and have been for a number of years. Umbrellas have not got the same level of regulation as agencies do. So they're not minded to do more work, to be more transparent when their margins are very small. So for them, it's all about volume. It is all about economies of scale. And the least information you can supply to people means the least amount of admin, which means that 15 or 20 pounds a week goes further to the bottom line. And the more they have to put processes into place, whether that's to deal with legislation or good practice or for transparency purposes, all of that costs money. And every time they do that, something like that, that margin gets eroded and eroded. And I think that is the reason why umbrella companies weren't doing it. And the good ones now are doing it. You know, whether, as I said, whether through legislative, obligation or because of best practice.
So it's just trying to get to the bare minimum possible. Yeah. Oh, it's understandable, isn't it? I mean, it's understandable, but I think perhaps there's going to be a drive and a request from those higher up the chain to see more transparency and more information. And those umbrellas rely heavily on being on the PSL. So I think there's probably going to be a drive for change from the end clients on that, just down to requirements, really. Carla, perhaps I could bring you in at this point. In terms of your experience, I know you worked for some of the big agencies and were quite instrumental in terms of understanding their PSLs and vetting, I guess, umbrellas for the PSL process. What were you looking for so that agencies can be clear on what they're doing when they're looking to formulate a PSL and when they're looking to understand which umbrellas they should be working with and how they can ensure transparency for their supply chain?
Well, I think it varies from agency to agency, but we had quite strict standards, and any umbrella company that we would engage with would have to be accredited by one of those professional bodies, either FCSA or Professional Passport. They would have had to have a trading history. They would have had to submit their accounts to us. And of course, we developed a relationship with them as well. So we would meet with their relationship managers and, gain that sort of reassurance that I think is really important, not just have, paperwork presented to you, but develop a relationship so both parties understand how they are expected to work. And I think I alluded to a supplier code of conduct as well. And I think it's very important that agencies have a supplier code of conduct and that they ensure that their suppliers are adhering to that.
Absolutely. And I don't think we can perhaps suggest that everyone in the supply chain should get together every 6 months and have a chat and see that everything's going on. But there are, IR35 Navigator, for example, ties everyone together because we've got one entity talking to all three levels of the supply chain, constantly updating things, making sure everything is working in the way that everyone thinks it's working, and creating that link between the chain. I think that kind of thing is going to become important to have a go-between. Clearly, the agency sitting in the middle of that chain is primed to perform that role, perform that function, and get everyone liaising and speaking and make sure everything in the supply chain is married up. And we've said it before, if they do that, they're going to retain more contractors because they are speaking to contractors all the time. They build a relationship, build loyalty. They are going to retain and grow their client base because ultimately it's too risky to move elsewhere because you don't know those processes bedded in, and they're going to win bids based on their compliance framework. So for me, I think you're absolutely right. Having that relationship and continuing that and building that relationship with everyone in the supply chain is going to be quite essential, but also quite, I think, positive for agencies who are sat in the middle of the supply chain. I think that's a good differentiator.
One other thing that was quite important to us was that the umbrella did not have a policy of referral fees or perks, because quite often recruitment consultants are incentivized by the reward of an iPad or something of that nature, or an actual cash payment for a referral. And we had a blanket ban on that.
Yeah, I think that's very prolific in the market, isn't it? Yeah. Okay, excellent. Well, before we move on from the kind of summarizing of supply chain transparency, is there anything else anyone wants to add?
The only thing that I would add is I completely agree with Tom about checking pay slips, but when we, getting down to the nuts and bolts, one of the things that I always used to do was not just check the pay slips. I used to get the umbrellas to provide copies of their FPS transmissions, their full payment submission transmissions, and a copy of the BACS file that made the actual payment to the contractor's actual bank account. And all three of those had to match. And yes, we didn't necessarily do it on every single payment, but we certainly did it on a sample of payments for every single umbrella on the PSL, that we used to work with. And, and I think the thing is that all of the good umbrellas would be more than happy to supply that. And those that don't want to supply it are the ones then that you have to think really seriously about. So I think it can and should go further than just pay slips. I think you've got to see all three of those things matching up and making sure that they're going to the right place.
Yeah, that's so essential, and you're right. I was going to follow that on with, well, why do you think are umbrellas happy to do that? But as I say before, umbrellas rely very heavily on being on the PSLs, and what do they have to hide? I mean, that's it. And I think you're all absolutely right there, that need to be thinking about the risk of getting it wrong, and the liability you could be visiting on the company far outweighs the cost of an iPad. So something to really seriously think about on that. Absolutely. Great. Okay. So moving on to it from a more kind of HMRC driven perspective, I guess. How do we prove transparency? How do we prove reasonable care? How does, if HMRC comes to you and says, show us your processes, show us your record keeping, show us how you arrived at this determination, how do you do that? Now, there are a lot of platforms out there. IR35 Navigator is, of course, one, which evidences all of the decision-making processes by a lawyer, and making sure those are done properly, and the entire supply chain is aware of each stage. And one of the ways that we do that is by evidencing transactions and evidencing events using blockchain. Supply chain transparency is no new thing, maybe in a slightly different market, but in America, it's massive and becoming increasingly important in supply chain for, I guess, increasing traceability of products and events through the supply chain. But talking about it in this contingent workforce supply chain now, it's going to be essential. So, Chris, perhaps I could come to you and talk to you around why blockchain is important in the process, and without getting too much into the crypto assets world, what is blockchain for the purposes of those who aren't familiar?
Yes, blockchain is synonymous with cryptocurrencies like Bitcoin. But putting currencies aside, let's just look at what blockchain is, or what it represents. The goal of blockchain is to allow digital information to be recorded and distributed, but most importantly, not edited. Blockchain is a type of database. It's a digital ledger of transactions. This digital information is stored in a block, and once that block is full, a new block is created that is linked to the previous one, and that's where you get the terminology blockchain. So this is all happening in chronological order. So the key point of understanding is that no one owns the blockchain, and there is no sort of overall certification authority for the blockchain. However, it's secure by design in the sense that a blockchain is replicated across thousands of computers, or nodes as they are called, which are scattered across the world. So once a transaction is recorded, its authenticity must be verified by the blockchain network. So thousands of computers on the blockchain will confirm the details of the transactions are correct, and once validated, it will be added to the blockchain block. So if anyone wants to validate the entry in a block, this will be verified by the thousands of computers that hold a copy of the blockchain. So whilst it's feasible that a block could be hacked or tampered with in order to sort of change the content of that digital transaction, the decentralized nature of the blockchain makes it near on impossible for it to be held out as being genuine. So if you can imagine someone has tampered with a block and is then trying to hold it out as being the genuine article, there would be thousands of computers around the world that would actually say, no, we don't recognize that blockchain at all. Therefore, it's not genuine. So in essence, to be able to carry off a situation where a block had been sort of tampered with, you would need to be taking control of thousands and thousands of computers around the world. So that just really isn't possible. So so for that reason, it's seen as a very good way of recording transactions and being in a position to demonstrate that they are, that transaction is genuine and that it happened at a certain point in time. Does that help explain it?
That's excellently explained. Distilled years of research into a short paragraph. So absolutely. And I think from a blockchain perspective, okay, there's lots of people out there who say but it's a bit of a fad. The crypto asset world is not that big. I think that can be understood, that can be appreciated. But I think if you can evidence a transaction at a time when you say it happened, it gives you all sorts of benefits in terms of proof. Tom will be able to explain that HMRC, yes, in their taxpayers charter to treat everyone as if they are honest and good and everything's fine and everything they get sent is proof. But sadly, that is just not the case. They have reason to raise a status determination inquiry, then they're coming at it from a starting perspective of this person falls within the off-payroll legislation, prove that it's wrong. So, Tom, in your expertise as a tax inquiry specialist, how do you see blockchain helping your role when you're going through the IR35 inquiry process?
I'll tell you the first thing I used to do when I was in HMRC and I got a set of records in. I used to get the Simplex book and it would have all the daily take-ins and workings out. And the first thing I'd do is check the serial number on it. And you'd be surprised how many times that book was actually published long after actually the alleged records were written up. They clearly had been backdated and constructed post the event. And that is the nature of a tax inspector's thinking. Verifying the records. Okay, I have a set of records in front of me, but when were they created? Are they contemporary? Are they trying to tell me a story that I want to hear by creating a number of documents and records to create this fantasy world for me? And you've summed it up perfectly. I mean, rightly or wrongly, the tax inspector's point of view will be, I believe that you are non-compliant. Prove to me that you are. And as Chris has very rightly said, the blockchain technology is perfect for that because it essentially date stamps when a document was created, and therefore it's indisputable that that was something that was very much created when it should have been, at a time when the circumstances were such to back that. And of course, you'll need to evidence the reasoning behind your thinking of that SDS, for example. But that's essentially saying we have done everything when we should have done it. And that goes a long way to helping an HMRC officer start to change their mind as to whether there is an issue here or not. I think the technology is great for that. I think the technology clearly is proven. I know it's seen to exist in a crypto world, which has its doubters clearly, but the technology itself can't be disputed. It's used for many other functions other than crypto. So I think it's a great technology for being able to evidence contemporary records and when they were created, which is exactly what you want to do when you show you've taken reasonable care.
Yeah, absolutely. And you can go through the chain. So you can say, well, end client reviewed status determination, created status determination on X date and approved it, understood it, checkbox. Moved down to X member of the supply chain, reviewed it for this length of time, checkbox, approved it. Moved down to contractor, approved it, understood. That's happened on day 1. Day 30, reviewed, document confirmed, working practice still concurrent, IR35 determination still relevant. Changes made, disagreement made, all effectively within one chain, which then HMRC can upload onto any portal around the world which verifies the legitimacy of a blockchain. Confirmed. All of those things happened on that day. You can't get much more simple than that in terms of checking and making sure the reasonable care requirement is met. And so when we were talking earlier about how do you prove your reasonable care requirement, you show your policies, you show your documents, as Carla detailed all of those key important documents that need to be shown. You show that you've grabbed hold of the payslip, you show the information, but instead of doing all of that, if you can show all of those steps have been taken through the provision of one document to HMRC, which is verifiable, that's going to save so much time, so much energy, and most importantly, cost of third parties defending the IR35 inquiry further down the line in the event that that happens. And let's not going to get this position confused. HMRC are going to be aggressive on IR35. They have a bee in their bonnet about contracting. They just do, and they are going to push that area very hard. So if you can be one of the targets from HMRC, they come out and I'll perhaps ask Tom to talk about how HMRC are going to approach this. But my view is that they're going to approach this in a very blanket way. They'll see 100 contractors working at an end client. They'll send an investigation. They'll expect information provided on those 100 contractors very quickly. And if you can go back to HMRC and say 100 contractors all determined this way on this date in this manner with these policies, check it through the blockchain, done, HMRC has carried out their investigation, inquiry can be closed off. Instead of having to make HMRC pour through hundreds of different documents, all in the supply chain, all different things that have happened, they're going to be, which moves on to a to-do list. That inquiry is going to be much more protracted, is going to reflect as a risk in your accounts. It's going to be a problem overall. So the quicker you can get that inquiry managed out and polished off, the better for both HMRC and you and your supply chain. So this is, for me, just one element of that pace, the ability to move through an inquiry very quickly. Tom, I wonder whether you have any thoughts on that.
No, I think you're right. I mean, clearly there's an expectation that post 6th of April, the off-payroll population will shrink. Now, HMRC will have a figure in their mind in each industry what that should have shrunk to, and if it's not in line with their thinking, which it very well may not be, because that kind of evidence gathering thought process hasn't really been representative in their documentation they've published so far. I think they're making a number of assumptions, but they will make those assumptions, and that what they expect. Finance, pharmaceuticals, they know those sort of areas rely heavily on contractors, and therefore they will expect to see that off payroll contractor base shrink. and that'll be the starting point. And then, okay, who's our biggest risks here? Let's go out and hit our biggest targets. And you're right, inquiries are intensive, costly, and stressful. They're the biggest, you know, whether you've done something wrong or whether you haven't, whether you've taken all the care in the world, you can't get away from the cost and the stress. And that's what everyone who undergoes a tax investigation will tell you. And if you can minimize the stress because you've got the evidence gathered, and you can minimize the cost because it's literally just a download or a printout and saying, here you go, here's everything, you know, knock yourself out, lads, and let me know if you've got any questions, you're going to save yourself a lot of heartache and aggro in the long run. And like I say, I mean, their starting point will be you are inside IR35. They wouldn't be approaching you if they thought anything different. You have to convince them. The quicker you can convince them to move on, it's one of those strange ironies. The longer the inquiry goes on, the more the inquiry officer feels they have to get something out of it to justify the time they've spent on it. So if you can get them off of the inquiry as quickly as possible, you've probably got more chance of convincing them there's no adjustments to be made here. Moving on to the next one.
Yeah, well put. I think we're all sharing a laugh at that one. Absolutely. Not the way most people think of HMRC, but certainly the way they have to operate given resourcing issues and a lot of pressure from within the HMRC unit. So yeah, I think anticipating how HMRC are going to approach this is part of the challenge really, and preparing for that, understanding the position and making the right determinations at the right time to make the HMRC officer comfortable that you've taken all the right steps. And for us, blockchain has played or will continue to play a key part in that moving forward. Great. Okay. I think we've covered everything there. I think we can summarize how important supply chain transparency is going to be. I think we have looked at how agencies can ready themselves for that. We have a number of checklists on the IR35 Navigator website for how agencies can prepare for those eventualities and prepare to keep that transparency going, make the necessary adjustments, how to meet the reasonable care requirements for all parties in the supply chain, and the part that blockchain plays in that. So we've covered a lot today. Thank you guys, as always. That was absolutely fantastic to hear the difference of opinions from your different professional areas. Does anyone have any last comments before we leave? No? Talked out. That's good to hear. Good. All right. Well, until next week, thank you all again, and we'll see you next Thursday.